Yo, what's popping, guys, and welcome back to another trading recap with me, Oscar. Today we're going to talk about GERN and how I ended up actually getting 126 bucks in profits, or after commissions and borrow fees, probably around 120 or 119 or something like that. Didn't have too many or too high borrow fees actually, which was really pleasant, and I managed my risk quite well, so I didn't take too many unnecessary entries and exits. So I don't know. This is going to be trade. I don't know, 819. Yeah. So this is trade 19. We're getting. I feel more and more comfortable with those patterns that I'm playing as of right now. Um, Mainly focusing on the short side. I'm feeling more and more comfortable in that area as of biases, and eventually I'm also going to look into the long side, but until I turn consistent, I want to focus on just one bias, and there is a lot of different patterns, so I just stay with this. But let's get into how I recognize that this was for sure not a breakout long that I think the majority of people play this at, or play this particular pattern or stock as, or thinking that this could be a potential good breakout pattern. First and foremost, I cannot stress what I'm going to say in just a second, so pay attention to this. You have the technical side of a breakout, sure, check, that is for the long side, but, and this is a big thing that you have to check, it is the filings. Because it's not rocket science, and what you also want to do is to check the news. And I use this OTC markets as one of my main source to find this. You can use SEC Edgar website for this for the filings as well. But I find this Outlook, or not Outlook, but this design much more comfortable, and you can also have news. So what I have on my trading computer or my trading desk is I have these two just as up here, and I have a news also, so I can have quick access to them, so that I don't have to type them in every time. But first of all, you want to first off look into the filings, and then look if there is a legit reason for this stock to be up. So if you look into the intraday chart, you'll see that we're gapping up some percentages, not huge, but we're still gapping up like 19%, I think it was in pre-market. And that is not huge, as I said, but it's still it still needs to have a reason for gapping up 20%, and especially, uh, and I just think that there has to be a reason, and especially if you look into the filings as well. So you go into the filings. I'm not going to be too in depth with the filings. If you want me to be that, request a video about that, and I'll go in more in depth how to read filings. But basically, this short formation of letters and numbers means that there has been an offering at this date. So you want to check that, and then you'll see that, hey, they have an ATM. We may offer and sell shares of common stock from time to time through this firm, of offering price up to 100 million. They have already sold some, so they only have, or quote unquote only have, 62 million to sell, or for them to sell stock of this ATM. And this is one of the biggest red flags that you can find if you're trying or if you're thinking about going long. If you see a company or a stock that has this, I would highly recommend you not even bothering watching it. I don't care how far it's going to go, because this basically means that they have an opportunity to dilute shares of an of a price of 62 million at any time. So to explain why and also to explain why I took this trade the way I did, I also wanted to see, okay, so okay, they have an ATM. That's the first big red flag that is really bearish. Secondly, is there any reason for this to be up? Like, ever? Is there any like real value or real value news that says, okay, hey, this is up for a good reason? And what I can find, this is also, it's a market news update. So no, there's no real reason. It's just basically um, a blog post or a post that talks about a bunch of stocks. As you can see, all these other tickers are also mentioned, so they will also pop up as news within the uh, other tickers. So I've checked those two off. So I said, hey, this is not looking very good on the long side. This is potentially much more a short setup. But as you know, the longs had the advantage of having that breakout area. So I wanted to respect that. So I didn't hammer in short on right away in the pre-market, because I wanted to respect the market open and see what really happened. But if we zoom in, you'll see that we have first half at market open. We have, and this is quite common. You see either, or what is most common is, especially in these cases, is that the price is um, deciding which way to go. So we have these wicks. But as the second candle come up and we reached that 7 level and stuffed, I started noticing stuff on the level 2 and the tape. So I said, hey, just let me quick. I have a spreadsheet that does this just to say, hey, what's the resistance that I'm risking off? What is my planned entry? And then it gives me back, it's just calculating the risk divided by the potential entry to see the risk level. So I did that, and so if I enter at 680 approximately, I'm risking like 3%. That is no big deal, especially with the potential of the dilution of an ATM. So that is exactly what I did. The only thing that I regret as it comes to uh, to my entry was that I didn't have the balls to have more size than I did. I only had 100 shares. I was thinking about taking 300 shares, which could have been so much more in profits. But I think I need more experience to be comfortable taking on size, and that is exactly what I got today. So I'm super grateful that I were able to get this experience, because that is one thing that is going to divide successful traders or advanced traders from intermediate traders or beginner traders. It's sure enough experience. I've been seeing Steven Duck so many times just talking about experience, market experience, and it's really true that the hours that you put in front of the screen is so important. And especially also this recapping what you do will help you reflect on what you can improve on and what you should keep on doing. So if we get into even more what I did, then I took half of my position. And remember, this is not a big deal as I only played 100 shares, so it wasn't too big of a deal. If I had played a bigger size, let's say the 300, I probably had taken off, I don't know, a round number, so maybe 1/3, so 100 shares. But I took them off at approximately the 609 or 610 level. And why I did this was because we had already dropped from 7 at open all the way down to 6, so almost $1 within, I don't know, like 10 minutes, yeah, like 12 minutes. So I said, hey, there is potentially going to be a bounce right here, or there's potentially going to be a bounce, and I don't know how big it is. And something that I also want to show you, and here is a good lesson for me to take on to the next trade. I should, in further on in my trading or in the future, I should either take off a smaller position size than 1/2 at these levels to keep in calm, because the statistics that I have shows me that the average gain is much bigger than these or than this drop from the opening top. So one key lesson right away is that before I take a trade, I should check the statistics for that pattern to know what I should expect from the stock or from the pattern. And I think that is like the main lesson of this trade that I'm going to stress. But then I did something that I don't know if I should be proud of it or if it's maybe some forced trade. I'm not really sure, but it turned out to be working well. And I will say that I had, it's not like I just blindly did it due to emotions, but this 1/2 that I exited down here, I saw it as an opportunity to re-enter as we had topped out just below VWAP, and we got that. Even if you zoom in more, we got this confirmation. So we topped out at just below VWAP, and then we got a confirmation that or this small confirmation that, okay, I think this is toast now. So what I ended up doing was I was chasing weakness a bit, and I'm not super proud of this entry because we hadn't broken down just yet, but I read or I calculated risk from the 5 or the 650s from my re-entry at 630. So it wasn't big of a deal either in percentage wise, but still something that I should, or in hindsight, when I look back in statistics, it was a good decision because the average, as I talked about before, the average downside of these potential plays is much bigger than just this low right here. So just by looking at statistics, this was a very rational and a good decision. And then adding the factors that we stuffed at just below VWAP also makes it a more reasonable decision. So in the end, I will not bash on me too much for taking this decision. Just next time, I think I should remember myself a bit more of the statistics and why this stock should drop more, or why my expectations should be higher. Then we continued downwards, and you know, I was quite emotional when I took this because it didn't break down just right away. So by the fact that I hadn't checked statistics, like drink every time I say statistics in this video, and you'll be stupid drunk. But since I hadn't checked them, I still wasn't comfortable, and so what I did was that I stressed off and I covered this share up here. So I marked the covers as blue. So I covered right around here from this entry up here, since though that entry was not super planned, so to say. So I took an emotional trade, which is something that I should really work on. And once more, hold your hats. If I had checked the statistics, I could have been more secure with my plan. But then we come to the end of this trade. I decided to cover down here at it 520s, something like that. I decided to cover the rest half of my position because we were about to get to that psychological number of 5, and also we had those 3 significant drops. So we had the first morning drop, then we had a significant washout once more, and then we had this last washout. And that kept reminding me of similar situations where I have seen similar patterns where we have around 2 to 3 washouts, and then the stock is done for the day. So I decided, hey, I'm going to lock in the rest of my profits. We have hit, and at this time, I had came to the bright conclusion of checking my statistics. So now I knew that this within this area was more within the range of the average play. So if you haven't already guessed my key lesson for this trade, it is checking statistics to know what to expect from the pattern before you enter the trade or before you start taking some off. I know that, or not particularly before you enter the trade, because that could be, as the minute decision that I took up here. If I were to have checked my statistics to see how much I'm going potentially to win on this trade, I could have lost my entry opportunity. So, rather focusing on getting a good entry and a good risk level, rather calculate that before you calculate what it average is. But of course, I had been checking stuff as the 15-day chart or the 1 month chart of where near support area could potentially be. And this is also something that I highly recommend you doing, because you can't just blindly short. No, I can't seem to click it in. You can't just blindly short and not have a clue where you're going to cover, because let's say we had a really key support area up in the 650s, then the risk area wouldn't have been ideal for taking a short. But this is just a trade, or a trade where all these indicators lined up quite nicely, and the market experience that I have been seeing of these patterns helped me recognize it much faster than before. So I should give props to myself for doing that. Key lesson: statistics. Remember them. Remember to check what your expectations should be so that they're realistic. And it's not only to see, okay, hey, its potential of dropping 50%. Also have the realistic expectation that, okay, if the statistic says 20%, when I reach its 20%, I should take most of my shares off, and should be very grateful for those profits. If you don't want to risk losing the profits that you have unrealized when you take some off at that level, I just recommend taking it off and saying, hey, I did what the statistics told me, uh, and if it's an outlier that dropped even more, then so be it. I think that's all, guys. And as I said before, if you have any requests of any other topic, please leave a comment. And until then, trade well and remember to be meticulous, because that is what is taking me further on in my journey and what is going to speed up my profit chart in the end. So peace, guys. Have a nice one.